Hey friends, in this video, I'll be reacting to another options YouTube online advertisement. I'll be reacting as a beginner options trader myself. They've become really popular in the past few years. I must first disclaim that I actually briefly met this lady. I think her name is Chloe. Yeah, she's actually a very nice lady. I'll try my best to be not biased in this video.
You want to buy 100 shares of Google at $110, but right now the price is too high. What should you do? Most of the time, investors will be just keep on waiting and hoping that the price will fall to the price that they wanted. But do you know that you can actually use options to collect potential passive income?
What she mentioned here, yeah, I would say is a very good explanation about options trading to complete beginners. Right now, the price of Google is at $87. In her ad, she said that maybe the price of Google is at $110. You feel that the price is too high and you're waiting for it to drop. But Google is still a company that you're interested to buy into anyway, right? So you can potentially earn passive income. Where I might probably disagree with the ad, right? In my opinion, I know it's a linguistics thing, right? I would never say that anything is passive, particularly options. Options is definitely not passive. My own interpretation, right, is that you don't have to do anything. Options trading, you need to manage your trade. So technically, I would say it's not passive. So that's the only thing I would disagree. Of course, it's part of marketing her product, right? So you need to do what you need to do to make a great YouTube advertisement. What she said in the first sentence, I think is very true, but it's something that options trading can definitely help you earn an additional income for. So if I were to try and make this ad a little bit more realistic, right, maybe I can change this word to collect additional income. Yeah, maybe not passive income, but then again, she said potential, right? So still can pass.
While waiting for the stock price to drop to your ideal purchase price. If you want to learn how you can actually potentially make more income,
I realize there's a lot of word potentially in this video, so I feel like it's okay. That makes it a little bit more realistic. I've made a previous reaction video to this trainer, Terrence Tan, right? He makes a lot more bolder claims compared to her. I feel like this ad is a little bit more realistic. Potentially, there's a lot of words that paints more of a realistic picture, which I think it's a good thing, because at the end of the day, I think for any advertisement that you do, right, it's best not to mislead people. Sometimes in these kind of ads, right, it's a little bit iffy whether you're misleading people or not. So
you want to learn how you can actually potentially make more income while waiting to buy the shares on the dip, then keep on watching. Warren Buffett once said, the stock market is a device to transfer wealth from the impatient to the patient. So in order to become a successful investor like Warren Buffett, patience is key. But you may be wondering, how long more do I have to wait before I can buy the stocks? And what if the stock price takes forever to come down?
One thing I noticed, right, the length of this video is freaking long, 5 minutes, right? 5 minutes. And compared to the past options trading advertisements that I've seen, right, it's usually about 1 minute to 2 minutes, right? So I find it fascinating that there's about 5 minutes worth of content to watch. But one thing I do realize is that her content is a lot more educational compared to Terrence, which I've reacted in the past before, right? I think that's also very crucial. I think this video is also more suited towards complete beginners who have no idea what options trading are.
While waiting, is there anything that you can do to potentially generate more income? Because
I feel like I should create a drinking game, right, to count how many times she says potentially. So I think, if I'm not wrong, 3 times already.
While waiting, is there anything that you can do to potentially generate more income? Because we all know that time is money. That's why in this video, I'm going to share with you a powerful option strategy to help you to do that. And later on, I will also be logging into the brokerage platform for you to learn how you can initiate this option strategy for yourself. Let's get started. First thing first, what is options? Basically, options are financial contracts that...
It seems like this is a very instructional video. I feel like she's not holding back anything in this video, so there's a lot of education going on, which I think is super important before you even spend your time attending any workshop, right?
First thing first, what is options? Basically, options are financial contracts that allow investors like you and me having the right or obligation to buy or sell a stock at an agreed price within a certain time frame.
Even for myself, right, I get confused by all these kind of chim stuff, so I'm sure that after this segment of the video, she'll continue to simplify it for more people to understand.
Just like how you can buy and sell a stock, you can also buy and sell an option contract.
At least in my experience, right, this is where most beginners gets confused. At least how I try to teach some of my friends options or just explain the concepts of options, right? You need to really try your best to explain it simply, and not many people understand the stock lingo as well. So I'll probably use a different analogy. You could have used the example of selling insurance. You could explain it using the analogy of a casino making a business. Those are some ways that you can explain it differently.
And there are 2 types of options. The first first one is put option and the second one is call options. And in order for you to buy stocks on the dip and potentially generate more than 2% per month,
another word, potentially, fall.
while waiting for the stock price to fall, you can consider using
I love this video script. It's not very direct. You can consider
sell put options. What does
selling put options is definitely something I'll recommend for any beginners to do. In fact, I made a video on how I earned my first $100 using options, and it's via selling put options as well. If you are interested to watch that video, I'll link it in the video description or in the top right hand corner over here.
a selling put option means? When you sell a put options on a stock, for example, Google, it basically means that you are promising to buy 100 shares of Google at the price that you want. And in return of you making this promise,
I love the way that she explains selling options here. This is definitely true. How I would explain to someone selling put options, right? I think you also need to mention the time frame of your promise. What she says here is that she's promising to buy 100 shares of Google at any price that you want. Let's say the price of Google right now is at $87. I promise to buy 100 shares of Google at $80, but there's an additional component to it, which is the time duration. And you must say that this promise is valid for 15 days, 30 days, 45 days. And based on the number of days, then you get paid accordingly.
the price that you want. And in return of you making this promise, you will receive some money called premium. Now, to make it easier for you to see, I'm going to log into the Mumu SG platform and show you how you can do that as well. For example, you want to buy 100 shares of Google at $110, but right now the stock price is $115, which is a little bit too high for you. And that is why instead of just waiting and do nothing in between, you can actually choose to sell a put option at strike price 110, which is exactly the price that you want to buy Google in the first place.
This is where I think it might get a little too simplified as well. And of course, keep in mind, this is an advertisement that she has only so little time to elaborate on it, right? I think a few things that I would have preferred to mention earlier, right? If you promise to buy 100 Google shares at $110, right? First things first, right? You must have 11,000 USD ready in your brokerage accounts. That's something that you must have, and I'll never advise anyone to not have that amount of money in your brokerage account. When you do this, you must have 11,000 USD ready. Another $1 million question, right, is that how do you arrive at a conclusion that you want to buy Google at $110 when the actual price of Google is at $115? There's a lot of other knowledge that beginner traders should have, in my opinion, to understand before even selling options.
You are making a promise to buy 100 shares of Google at $110, and you will only need to buy it when the price drops below $110. There are many different options expiration date for you to choose from, and in this example, I'm choosing 16th of September as a demonstration. Change your options quantity to 1, and immediately you can see that you will get to earn an option premium of $190. And if you calculate your return on investment using $190 divide by $11,000, which is the amount of money that you need to set aside to buy 100 shares of Google.
This is a part where she mentions that you need a certain amount of capital, so I think this is definitely realistic. This is definitely a way of how I would explain options trading to any beginner as well.
Your return on investment is actually more than 1.7% in about 21 days.
So think about it, a return of 1.7 in 21 days, right? If you extrapolate that data to be an annual interest rate, 1.7 maybe times 12, let's just assume 1.7 in 30 days, right? 1.7 times 12, right? That's almost an annualized return of 14 to 15%, which is actually really, really good. That's even mostly higher than the S&P 500. That's actually one of the reasons why I'm a big fan of options trading. But having said that, right, this is just a one trade. You need to make many trades in a year. And the fact is, right, there will be many trades that will not be in your favor. Imagine if you have to fork out $11,000 to buy 100 Google shares at $110 each, right? That's a lot of money, okay? I'm not sure about you guys, but 11,000 USD to me is still quite a little bit of money. So not everyone has that. This is something that you definitely need to be careful of.
If you translate into a monthly ROI, that is more than 2%. If you are wondering what strike price to choose from, well, there are many different strike prices as well. You can choose -1, -5, -10. But the general rule of thumb is choose a strike price as below the current stock price, because you only want to promise to buy something that is below the market price. And you can choose.
This is something that I definitely agree. If let's say the price of Google right now is at $87, right? I'll sell an option to buy 100 Google shares at maybe $70, $75 or as low as possible. Some people, right, including me myself, I actually only want to sell options to get the premiums, get paid for, but I actually don't want to spend my real money to buy 100 shares of Google. I just want to earn a premium. So that's actually my main strategy. strategy for selling options.
To do a sell put options less than 1 month so that your ROI will be the most optimal. And that also means that you can potentially collect income again and again, months after months. But
this is definitely true. 1 month expiry to date for selling put options, I think is a great thing.
most importantly, before you sell a put option, you need to ask yourself this question. Is this a great company that you are willing to buy 100 shares?
So I think this is a great question. Is this a great company that you are willing to buy 100 shares of? In my video of how I earned my first $100, right, I would say, first choose a company you inherently believe that will flourish in the next 5 to 7 years. You need to have your own conviction to buy 100 shares of that particular company, because you need to don't mind owning it for a long time if you are assigned. When I say assigned, it means that you're forced to buy 100 shares of the stock that you chose at a particular price.
Shares. And secondly, is this the right price to buy? Now,
This is also $1 million question, like what I said earlier, right? Is this the right price to buy? It's very, very difficult to really understand what is the right price to buy unless you know what's called technical analysis. If you don't know what technical analysis is, right, feel free to Google ahead or watch my video on how I've earned my first $100, where I go through a little bit of technical analysis. I'll really encourage anyone to just learn a little bit of technical analysis, concepts about resistance and support, simple moving averages, to understand what is the right price to buy the stock at.
to buy. Now, the next question is, what happens after 16th of September? If Google's stock price dropped below $110, you will have to fork out $11,000 to buy 100 shares of Google, which is exactly
That is quite a lot of money.
what you want to do in the first place. Plus,
You must really have the mind game to convince yourself, yes, I don't mind buying 100 shares of Google at $110. Maybe I can share with you a terrible example, right? As you know, Tesla is, as of 7th January, right? This is the date I'm making this video. The stock price of Tesla has been going down. If you're telling yourself that, oh, Tesla is a great company, you must have the mental fortitude, right, to really hold on to Tesla. That's why they call HODL, hold on for dear life. So let's say, the price now of Tesla is at $310 when it was at 21st September, right? In October, it dropped to $216. Then maybe you sold a put option at $260. Maybe then you're forced to buy 100 shares of Tesla at $261. That's about $26,000, right? The stock price drops even further to $110, right? So that's where the risk is. If you have spent $26,000 to buy 100 Tesla shares, right, you would have literally lost 50% or 60% of your money. And this is what I emphasize to anyone, right? For risky things, right, be very, very careful, because this is where you can lose a lot of money. So far, I think this is a great video. I'm not sure if she'll elaborate more on the dark side when it comes to options trading, which actually is what I want to do more of.
you also get to keep the $190 premium that you earned in the first place. However, if the stock price stays above $110, you will not be able to buy 100 shares of Google. Still, you get to keep your $190 of premium.
I would say this is exactly the case, where you can actually get to keep the premiums cash in your brokerage account. So that's a great thing about selling options.
So in both scenarios, it's a win-win situation. That's it. You just learned this powerful option strategy.
She didn't really elaborate on the dark side, right? So then again, the information that she has provided at the very start, right? Is this a great company that you are willing to buy 100 shares of? If you yourself believe that Tesla is a great company to own shares of, right, this I would say is potentially very, very risky. Keep in mind, this is an advertisement, so it's supposed to bait you into the workshop, because they are spending money to run these ads to people, right? So they need to get a return on their investments. That's something that I would really want to highlight to anyone considering options trading.
You just learned this powerful option strategy called sell put, and how you can use it to your advantage to collect some premium while waiting for the stock price to drop to the price that you want. There's so many option strategies out there. I can't possibly explain everything in this video, and that is why if you want to learn exactly how you can get started investing with the power of options, then do join us in our upcoming Options Next Level Masterclass. We'll be sharing with you 3 powerful option strategies for you to take advantage of. All you need to do is to register.
I'd love for her to say what are the 3 strategies. If you know the strategy, then maybe you don't need to sign up for the webinar, I guess. This is part of the curiosity hook for them to entice you to join the webinar, which I think it's part of business anyway. So this is business, and I do expect there to be a little bit of selling in these workshops as well. Very, very interesting. In my opinion, right, if you compare this video with the video from Terrence Tan, right, it's a very different dynamic. Terrence Tan video is a little bit more vague, a little bit more flashy compared to this particular video. In my opinion, I'll prefer this video a lot more compared to Terrence Tan video.
Strategies for you to take advantage of. All you need to do is to register for your free spot via the link below. Please also note that this video is for educational purposes. The stock that I share in this video is not a buy or a sell recommendation. Make sure you do your due diligence before making any investment decision. so that you can become an independent investor.
I think this is actually a very great thing to say because sometimes you really need to say the obvious, right? You really need to do your homework before you even jump into any of these things, because if you don't know what you're doing, right, what I can say is that you can potentially lose a lot of money. Having a disclaimer here would be really, really good. Not to compare ads against ads, right? Like, notice that in this video, there's more mention, there's more caution, words like potentially can consider, a lot more due diligence. So I think this ad that I'm seeing is a lot more realistic. I think this is what would be a more accurate representation of what options can do for you. But then again, there's a more of a dark side. Of course, she wouldn't want to say in these videos because this is an advertisement meant to drive workshop sign-ups so that she can sell more products accordingly.
Before making any investment decision so that you can become an independent investor.
That's all for me reacting to these videos. I have no affiliation with all these people. I inherently believe myself that options trading is useful to gain an additional income. Just that in general, the reason why I'm making all these kind of videos, right, is to just paint more of a realistic picture as much as I can, to paint the dark side of options, right? So if you do get the options, right, you need to understand the dark side before you understand the light side, if that makes sense. Leave any comments or questions that you have below, and I'll see you in the next one.